give this as a quick bonus, all right? So this is really important to understand. The reason that you need to have your asset, the name of your asset, owned by a different entity, and the name of your business as a different entity, is because it also gives you the ability to obtain two separate loans. It gives you the ability to obtain two separate loans. I'm gonna give you an example here, okay? So at this point on paper, you are the owner of this entity here, the primary entity who is receiving the rental payments, and you are the owner of this entity here, right? This one is located right here. Now, both of these entities can actually open up their own separate solo 401ks. But also, what is amazing about this is that you could get a loan, you could refinance this entity by itself, and you will be refinancing just this entity, okay? You can later come by next month or the next year and get a business loan for this entity, all right? That's the beauty with this. And as you're doing this on both ends, especially as you're making your contributions each and every year to your solo 401k from both entities, it allows you to lower your tax liability. So in other words, you could be earning the same amount of money, but you're making contributions twice instead of once. And it allows you to have less of a taxation, meaning that you pay Uncle Sam less money, meaning that you grow your portfolio and your wealth faster. But if you make the mistake that most people make, because they're not well advised by someone, they're not watching this video like you are, you make the mistake that most people make is that they would put this entity, let's say it is Flower Shop, right? They would put Flower Shop LLC, for example, in the name of the building. So put the name of Flower Shop LLC, and then they would have their own flower shop here. And then when they go to a bank to get a loan, the bank's going to say, "Hey, listen, we're seeing that you're having different types of income. We're seeing that you're having income from tenants, right? And we're seeing you're having income from from selling flowers. Well, we're going to need to only give you a loan based off of one or the other." In addition to that, when it's time to file your taxes, the flower shop, if this is all one entity, they're going to be limited on the type of write-offs they can have. But if there's just one entity as a real estate company, that real estate company normally, depending on the tax law at the time, may have access to more write-offs than just the flower shop in general. If you think about it this way, think about during the pandemic, right? And if anyone has read about, the PPP loans, things like that, part of what they are giving you money for is to pay your lease payments, either your lease payments and your mortgage payments. Well, in this case, if they're in separate entities, the flower shop is paying a lease payment to the owner or the other entity that you own to lease space there, okay? That's a bigger loan. And then the entity that owns the building, if you have a mortgage on it, is paying a mortgage to the bank. And if that's the case, you can show that with your statements and your documents. That's a bigger loan. But what most people have done is that they buy a building in the name of one entity, and then they lease it in the same entity, or they occupy it in the same entity. It's not wise. And something that's also really, really important, this is an extra bonus, and I need you to listen very closely. An SBA loan will allow a business to purchase a building and occupy that building at 51% or more, meaning that the other 49% of that building space can be leased or subleased to different entities. And that's what makes this model so beautiful, because it doesn't have to be just a smaller mixed unit / multifamily property. It could be 1,000 residential units and only 4 office space units. There could be pet shops there, right? Or dog daycares or grooming, okay? At the bottom. And your business can occupy 51% of that space, and you can lease the rest of it to a grooming area. That's what's so awesome about this. So if you weren't able to go this route, maybe you're able to go SBA, and you can still use this same model, and especially on the back end, so that in a year, 2, 3 years time, it just continues to compound. Now, there's an additional step that you can add to this that would truly, oh my gosh, it would explode your portfolio going forward. But nonetheless, thank you so much. I hope you enjoyed the bonus, and I'll see you on the next video.